Hello, welcome to this video featuring Tom's Tools and yours truly, Mike Wade, Chief Options Strategist for Tom Gentile. Stock and options trading has large potential rewards, but also large potential risks. You must be aware of these risks and be willing to accept them in order to invest in the stock and options market. Don't trade money you cannot afford to lose. Remember, I'm not giving you advice on a particular stock or option, so please don't construe anything I'm about to share with you as advice. I am not a broker or dealer. I'm a trader just like you. All prices are in US dollars unless noted otherwise, and please feel free to read the balance of the disclaimer at your leisure. All right, don't you hate it when this happens? You spent 10 minutes finding a trade. This happened to me on Monday. I found this gorgeous trade, and I had a put up. I found a put I wanted to buy. I was bearish on RDSA, and I found a put within the tools, and everything looked really good until I started thinking about this thing, slippage. The slippage on this thing was actually over 10%. 10% slippage is the rule of thumb that we like to use. What's slippage? Well, it's the difference between the bid and the ask price here. $1.10 minus 80, that's 30 cents. Slippage is what you lose immediately upon buying an option at the natural price or selling it at the bid price, the natural price. So that's slippage. And you really don't want to put yourself in any more than a 10% hole. That means the stock has to move enough to recover 10% in order to start getting into the profit zone. So anyway, that's the point. You don't want slippage greater than 10%. In this particular case, the slippage was way too wide. How do you calculate slippage? You subtract the ask minus the bid, and you divide that by the ask price. So in this case, we're looking at $1.10 minus 80, which is 30 cents, divided by 110, which is 27%. That's too high. This is a no-go. I wasted 10 minutes of my time on this particular trade. That's not a lot of time, but you do this enough, and it can be really costly. All right, in terms of time. All right, so what can we do about this? Here's what I want to do in this video. I want to show you how you can avoid that issue altogether by only evaluating options with acceptable slippage. We're going to be using a ranker called the Stock Filter List Ranker. And with that ranker, we're going to find stocks with the best option slippage, less than 10%, and save those results for use in subsequent scans. This list will be a huge time saver for you. All right, let's hop into the software and let me show you how to do this. It's really easy. You go into Website, Lists, and Filter List. And look at what's here. This is really beautiful. There's a lot of stuff we can do here. We can filter lists based on stock price or stock volume. We can look for the tightest bid-ask spreads at 1%. That's really, really narrow. We can remove stocks that are in the merger process. We can look for stocks with 2% slippage or less. We can also do things with open interest and volume and implied volatility. So what I'm going to do is I'm interested in the entire universe of all optionable stocks and indices. So I'm going to select that list. You might try the Russell 2000. You might do the S&P 500, although the S&P 500 options are generally pretty tight. So I'm going to do the whole universe. I've got 2% slippage identified. I click the search button. I've already run it because it takes a little bit of time. And this is what comes back. In this case, we have 952 of the 4,216 optionable stocks and indices. 952 of them have 2% slippage or less. And you can see some big names in here, including the S&P index itself, the Qs, Amazon, the Diamonds, really big names, General Motors, Applied Materials, Walmart, Priceline, a lot of them in here. So that's what I want. So what I'm going to do is take that list of 952 bid-ask, really good slippage stocks. I'm going to find a list that's blank, so it'll be list and then a number. My next available list is list 14. And then I'm going to give this thing a name. You might say liquid all optionables or something like that. Whatever you like, but that list. I click the replace button, and then that list is going to be what I use to do my other scans going forward. That will keep me out of the high slippage stocks. So in summary, this is what you do. You go into the Stock Filter List Ranker in the way that I showed you, select all optionable stocks and indices, select 2% slippage and merge removal, click your search button, and then take the results that have come back, in this case 952, select one of your blank lists, rename it. In this case I use liquid all optionables, and then click replace, and you are off to the races. That list, ladies and gentlemen, will save you a great deal of time. Thanks for watching, everybody. Happy trading, and I'll see you next time.